Hey folks, welcome to another session on the money space with me, Kalu Aja. My name is Kalu Aja, and of this space we're talking money, the economy, and of course finance, right? Every week we bring in topics here that teach you more about your money and how you can be a better investor. This week we're talking about a review of the performance of the Nigerian banking stocks. If you've been following Nigerian banking stocks or the Nigerian economy in general, you would have seen Nigerian banks are posting $1 trillion revenues, $1 trillion here and there, right? But the question is that how can Nigerian banks post so much returns and the economy seem not to be catching up, i.e. the economy is sluggish, but the banks are doing very, very well. Are the banks making money off Nigerians or in spite of Nigerians or with Nigerians? That's really what I want to find out in the next few hours with my guest. His name is Akpifo Onome. Onome, I've sent you an invite. Once you accept that invite, we can get started. If you're not following him, please do. He's in the trenches, bringing us those weekly market returns every week, and I do appreciate him doing that. So I want to just really talk about Nigerian banking stocks, top down. We're going to start from the economy, then go to the banking subsector, then go to our big Fugas banks, one by one, go through them, give a recommendation on those banks, and then just learn what we can from them. Before Named does log in, I'd like to just say, hey guys, everything we're doing here is really going to be all educational. It's not investment advice. We're not asking you to buy, sell any stock in particular, but essentially we're just asking you to listen in, learn what you can if it's possible, and then go speak to your advisor. So we're not asking you to buy, sell. This is not an investment show per se. Just making sure I put that disclaimer out there. So Onome is not yet logged in with me to speak, but let me just share two things that came to mind that I saw this week. Number one, I saw a report that Nigerians are avoiding the stock market this year. 38% return in the stock market last year, but this year, a lot of Nigerians are not investing in the stock market. I saw a report. I then saw a second report that said that the foreign participation in the Nigerian stock market has gone up. So if you're sitting out, the folks that are outside Nigeria are seeing an opportunity in Nigeria, and they are coming in to essentially invest in Nigeria. So I would say, hey, what are you doing? You want to get into the country and put your money where it's working. So the economy right now, I always tell my folks, is at a discount. Let's not lie to ourselves. Nigeria has serious issues, but those issues are the opportunities, right? Do you want to buy a stock when it's up or when it's down? You really want to buy a stock when it's down. So just the way I see it is that the Nigerian market is at a discount because our Naira is at a discount. So if you are investing using Naira, you are picking up these things here and there, these opportunities here and there at a discount. So I'm not asking you to buy, but look at it in that light. There's an opportunity here for you to buy this stocks. How do you know that's a discount? The price to earnings, the PE ratio of these stocks are very, very low. You see a company that is worth a trillion PAT with capital of maybe $1 trillion. Man, it's a no-brainer. But Onome is here now. Onome, hi. How are you doing?
Hi, Carlo. I'm doing good. Can you hear me loud and clear?
Yes, I can. Do I call you Onome or Akpifo? Which would you prefer?
Onome is fine.
Onome is fine?
Yeah, only one person calls me before, and the person is yeah.
No worries, man. As long as it was. Well, thanks for coming in here. Thanks for hopping in to just sort of give us the lay of the land in terms of Nigerian banking stocks. I was just saying before you joined it that I read two reports. Number one, Nigerians are not investing in the stock market. Number two, the foreign participation has gone up in Nigeria. But let's just start off let me just ask you this question. What would you say in terms of the performance of the Nigerian stock market as a whole this year? Where are we? Are we doing well, going forward, coming back? What would you, or how would you categorize the market this year?
I mean, compared to last year, first is we are positive this year. The market is up 5.6%, so that's positive. It's just that when you look at the run we had last year, this year seems kind of slow. So compared to last year, it's kind of a bit slow. But if I'm just looking at it from a January to date, we are positive, and that's good. Yeah.
So when you say 5%, is that month to month or year to date?
Year to date.
Okay. So just, are we beating inflation? Not that it matters, but are we beating inflation at that? Because inflation is now 20 something, right?
Yeah, I mean, ideally, yes, you actually should look at it from an inflation, am I beating inflation perspective. You're looking at it from that perspective. No, you haven't beaten inflation on average if you're in the stock market this year. Because mid-20s inflation, you're up 5.6 year to date. Even if we're lucky, let's say we'll push maybe 10, 15% before the end of the year. So I don't think from that angle you wouldn't beat inflation. But if you're looking at it from a dividend yield angle for of the stocks and maybe zeroing in on some of the banking stocks, I think by the time you add your dividend yield and your capital appreciation, it's very likely that you would have beaten inflation. But broadly speaking, no.
And I love dividends. I look at dividends as my, should we say, my parachute. If I buy a stock and the stock goes up and down, but they pay me a dividend, I sort of feel that at least I got something out of it. So I personally only buy dividend stocks. I'm not saying you should, because dividend stocks in the West especially means the company is mature and it's now paying you a dividend. Tesla doesn't pay any dividends, right? Microsoft just started paying dividends. But in Nigeria, I personally like dividends because it just gives me a cash return. Is that a good strategy? Am I doing it wrong?
I mean, it's a good strategy. In fact, for me, for my own portfolio, how I model things, especially with Nigerian stocks, is I discount capital appreciation because, yes, you can argue the last 4 or 5 years have been pretty good. But when you zero down to some of the years, it was either, if you stretch it to 10 years, you take where we had crazy devaluations. The stock market used to pop then because in dollar terms, you could buy more with the same amount in dollars, right? And then you had a few years ago, I think it was 2-3 years ago, when Murphy was CBN governor and then a 1-year T-bill was doing 1%. The stock market popped because if I was doing 1% on a 1-year T-bill, I'd movement somewhere else. So when you discount some of those years and all that, you might say that capital appreciation in the Nigerian market is a bit spotty. If you look at the US market, probably discounting the uncertainty you have with Trump, you can kind of argue that worst case scenario, I can say, hey, I'll probably do 7 to 10% on average, right? Or you can even work with 5%. If you work with 5%, inflation has been trending, say, lower than that. Net, you're good. But if you're looking at Nigeria and you say, I want to work on capital appreciation, this, except you have FPIs coming in drastically, you're not going to do 30-40%. I doubt you'll do 25%. But if you're looking at it from the angle of a dividend yield, which is to say, I buy a stock for 100 naira and gives me a dividend yield of, even if it's 10, 15, 18%, it means that in 5-6 years, I've essentially recovered my investment. Yes, you can argue that maybe you're not beating inflation from a dividend yield, but to me, I kind of take stocks from an angle of, can I at least make 7, 10, 15% every year? If I can do that for 10 years, then I'm good. Because if you structure your portfolio well, then take that dividend return and put it into something that earns you a higher risk, or put it into something else, So, 100% agree.
Gotcha. I hear you. Okay, let's go into the banking subsector. How would you term the Nigerian banking subsector, just as a whole, taking that whole sector as as one? When I look at the GDP contribution of Nigerian bank, it's not a lot. They don't contribute a lot to Nigerian GDP, but they have the highest growth, i.e., their growth is almost 68% or so. But in terms of their contribution, not a lot. Perhaps that's why we see trillions listed here, but we don't feel the effect per se. What's your take on that banking subsector? Do you think they are doing well in spite of Nigerians, or they are doing well because of Nigerians? Or what's your take, really?
I'd say that, I'd say they are doing well in spite of Nigeria, because when you look at it, if you add up the revenues of maybe the big 10 banks, right? They're probably what? Let's assume the Fugas banks, GT, Access, Zenith probably should do what? 4 trillion in revenue. And let's just assume altogether that these banks do maybe 30 trillion in revenue. Let's assume that they now do maybe 3 trillion in profit. So if you take their revenues and their profits and you compare it to the larger economy, it's rather tiny, which is odd. So I think that they're doing, they could do better, because when you look at where the core of the money is coming from, it's interest income from loans, interest income mostly from treasury bills and bonds. And if the economy was working in a proper manner, you probably should see some of these banks lending more, because some of the banks, when you look at their loan books, it's rather tiny. You take Orange Bank, that's what I like to call GT Bank. You look at the loan book, it's tiny. And I know people have complained, but look, water follows the path of least resistance. And I think making money follows the same path. So if the economy isn't really conducive for lending, banks can't do exceedingly well. Let's look at the last 5 years. In the last 5 years, we've had at least 2-3 economic shocks, one way or the other. You had COVID, which was an economic shock. You had, if memory serves me correct, last year, you had a devaluation, and you had the removal of fuel subsidy, which was a twin shock, because your subsidy removal means that operating costs are higher, consumer demand, consumer purchasing power is squeezed, companies are squeezed. And then you have your FX shock, which means that from a operating cost perspective, imported raw materials are more expensive. Consumer is squeezed from a foreign currency liability perspective. You're paying higher. So when you look at all these shocks to an economy, I think the fact that banks are doing this well really is just in spite of the economy, not because the economy is bad.
You mentioned something. You said banks are buying T-bills. There's this trade in America, we say the 939. So is it 936 trade, where you get to work by 9 a.m., you buy your T-bills by 3 p.m., you go play golf by 6 p.m. So it's not real banking. You're just making money because you take money from the consumers in Nigeria's case, maybe at 10% you pay savings or whatever. You don't even pay savings. You go buy treasury bills that pay you 20%. Then you declare a profit. When you say interest income, is the T-bill interest, is that fee income or interest income? If a bank buys treasury bills, is that fee or interest income?
It's interest income, but I would say that for some of the banks, the loan books are quite heavy. I was looking at Fidelity Bank, if my memory serves me correct. This should be a 4-point-something trillion loan book. Third base is what's over 10 trillion. So really, almost half of Fidelity Bank's asset base is made up of loans. And so some of them are lending. But when you look at the economy, it just makes lending to be a bit difficult. So I know people grumble, and if every time I'm on a GT call, we always ask Shegun, who's Group CEO, why don't you lend a bit more? And Shegun will tell you that, look, why don't you focus on asset yields and not my loan? So, yes, you might say, kind of lazy banking, but why would I want to stress myself? Look at the oil and gas loan that's kind of knocked many of the banks, right? That's oil and gas. A few years ago, you had the whole Nine Mobile issue, and the CBN and the NCC had to step in because banks were involved and it was becoming heated. So if I'm in a 20 something percent inflation environment, I mean, if you look at the spread between savings, I take savings at what I pay 10% on savings, I can make 20% on T-bills, and I have a spread of 10%. Why would I want to bother myself lending? I mean, it's just common sense. It's the easiest thing to do. So why not do the best thing? And in some ways, why not do the safest thing? Because people complain, banks don't lend enough to individuals and the likes, but it's hard because recovering bad loans is tough in Nigeria. It's tough to recover from corporate customers. It's tough to recover from retail loans. So really, if you have an environment that isn't favorable to lending, why bother lending? Why don't you just make money by your fixed income, your FCY trading, and then till the environment is more conducive?
So in essence, that they are guilty as charged if we say that the banks have made money off the very, very generous, risk-free treasury and sovereign bond yields. Essentially, if you just have a bank taking deposits, taking current accounts, and you are investing risk-free in treasury bills, treasury bonds, you're going to just make a huge interest income without any volatility. Are the banks guilty as charged?
I would say that the banks are profiting from the inefficiency of Nigeria, which is, I mean, I would be disappointed.
Well said. Well, I mean, it's not the bank's fault, like you said. If I was a bank CEO and I got 20% risk-free or 25% risk-adjusted, I will go for 20% risk-free because my cost of capital is maybe 10, 8, 5. So it's a no-brainer. We can't blame the banks, but I'm just trying to explain to those listening, this is why the banks really are making money. If the government is saying, give me money and I'll pay you 20%, no issuer risk, you'll be a fool not to take that option than to give money to Kalu to build a poultry. And Kalu says, going to pay 25%. What if the birds die? So that's just where we are. Okay, so we've gotten that feel. And just to come back to the dividend yield, I look at dividend yield right now for the entire market, right? For Nigeria, it's about 10%. So dividend yield for Nigerian stocks, industry average about 10%. So let's keep that in mind as we go along. So let's just sort of go down this ladder of Nigerian banks. We have about how many Nigerian banks? Let's start with the Fugans, guys. The Fugans. I mean, call the bank. I just have a question. Buy, sell, or hold, and tell me why. So, are you okay with that game?
Oh, sure. Yes.
Okay. So, FUGAZ. Do I have it right? That's First Union, GT Orange Bank. That's Fugas, right? I've not missed anyone.
Yeah, First
UBA.
First Bank, UBA, GT, Access, and Zenith.
Okay, so let's start with First Bank. Buy, sell, or hold?
Sell.
I know, man. Do you want to give a disclosure? Like, this is just your opinion. Yeah.
Okay. Oh, sure. In fact, I'll give the usual analyst disclosures. As you know, you see on Bloomberg and the like. So first is, I may or may not have, or I have holdings, I think literally in most banks in Nigeria. So that's a factor. 2 is, this isn't investment advice. 3 is that my opinions are subject to change at any point in time. So I can go buy today and tomorrow I can go sell. So opinions are not cast in cement. And I'll add a 4th one, that this is Nigeria. As an analyst, sometimes you're privy to confidential information that you can't share online. So if some of my recommendations are a bit crazy, maybe you have to factor that. Yeah.
All right, perfect. That works for me. So let's go back to First Bank. What's your take? Buy, sell, or hold?
It's a sell. It's a sell for me. So first is I'm generally bearish on banks that have not concluded their fundraising. That's 1. 2 is when I look at the Fugas banks, I think that First Bank is the weakest of the lot because I'm not sure what their strategic direction is. When I look at all the rest of the four, I know clearly where they're going. So with access, okay, we're going to do Africa, Nigeria, and Europe, pushing hard in Africa. That should yield fruits in a couple of years. With a GT, we're going to push hard in asset management, PFAs. We're going to fix East African units to do better. With a Zenith, we're good at trading. We're going to go into payments. Payment provisions should come down materially. With a UBA, Pan-African firm, near 50-50 split profit. But when I come to First Bank, and even though, they have a new board, I think groups, Group MT and the likes, I'm not clear what the strategy is. What do you want to do? Sure, you have benefits of low-cost funds. But beyond that, what do you want to do? Like, what's going to be your unique selling point? I don't quite know for them. So those are the two reasons why First Bank is a sell for me. And also the dilution. I'm not sure how much they want to raise. I think it was 300 and something billion or more. So so by the time we look at that, First Bank is trading at 20 something naira a share. Means that you're looking at maybe potential increase in number of shares by maybe 10 billion or so. So it's a no.
Let me give you some pushback, right? So First Bank is cheap right now. PE ratio is 1.7, which means if I bought First Bank today, right, at the price today, what's the price today? About 20 something, 25 naira. It would take me a year to get my money back. So, i.e., 1.7 PE. But the dividend return, remember I told you guys that average dividend return was 10%. Their dividend return is about 2.3. That's the dividend yield for First Bank. So I get nothing from dividend yield. But it's a very, very cheap stock. Does that change anything?
No,
it's still a hard no for you.
If you look at broadly the entire industry, at least the tier one banks, they are all cheap. Even if you don't want to do the whole calculation of PE, and I was discussing this with someone. There are banks that are going to make 4 trillion in revenue this year, 1 trillion in profits after tax, and the market cap is 1 trillion. It doesn't make sense, So, maybe if I were to play devil's advocate for First Bank, if they are able to push the dividends towards maybe a 1.52 naira, which is unlikely, but let's just say they do a 1.5 naira as dividend, then it may be a bit more interesting. But to me, First Bank is cheap, or the cheapest, or one of the cheapest of the lot, because I'm not sure of the direction. And two is the stage 2 loans. I mean, if you do stage 1, stage 2, stage 3 loans for First Bank, Q1 25 versus Q1 24, yes, you have lower stage 3 loans, but stage 2 loans provisions jumped massive. Like they went from 60-something billion to 200 odd billion. So I'm very wary of that as well for them. So it's a no for me. But if it becomes cheaper, so if I saw First Bank, which is unlikely, but if I saw First Bank trading at maybe 15, 16 naira, then I would go in.
So you want that price to fall? You think it's overpriced for the future returns, future earnings, more or less? Okay, I got you. Let's go to UBA. UBA, same thing. Buy, sell, or hold?
UBA is a hold for me. I want to see where the stock would settle after they've done their second phase of fundraise. Other than that, I quite like the bank. I just want to see where the price will settle. I usually don't like to buy anything till after capital raise is concluded. So it's a hold for me.
I mean, UBA I look at them as a Goldman Sachs in a way. They do very, very sophisticated deals. They did the first zero coupon bond in Nigeria. They're the ones financing the NNPC, all that stuff they're doing NNPC. Their trading desk is top notch, top notch. That doesn't add any points for you?
I I mean, why I like UBA, or the part I like best about UBA is they kind of got it early with the whole Pan-African operations. Because when you look at the splits between profits and African profits and Nigerian profit, I think it's almost 50-50 between Nigeria and every other world.
So that diversification of earnings, they're not earning CFA and even Rand and all that, And they're the only bank in America, right? They're the only Nigerian bank in America. That's the license in America, if I'm correct.
Plus, they have some other expansion plans in the works. Forgotten where I knew I listened to the call, but so I like that split. And I think people tend to underrate this, but running a profitable African operation is tough. So when you look at all the firms that kind of doing this, so UBA has gotten it right. Access is kind of almost there. And then you have ETI that is struggling with Nigeria, kind of doing well in some places and doing well, not so well in others. Really, I quite like it. I quite like what they do. And I know this may sound crazy, but I suspect that one day they might just go crazy and say, you know what, let's do the whole code thing and let's expand into other areas in finance. Because when I look at the potentials they have because of their branch spread, I'm almost wondering, why not slap in an asset management unit?
Don't they have that? No. That company is not them. That's company. What's it called?
United Capital.
Yeah.
So they spun it off to shareholders. There was a whole adopt a whole team or spin off. So UBA and GT decided to spin off. But when I think of it, I mean it's an opportunity that that probably, even though management hasn't mentioned this, but when I look at the potentials, if I'm MD of a UBA, I might say, look, why don't I try my hands on asset management? Or why don't I try my hands on a PFA of some sort?
Then the PFC. So they're one of the biggest pension fund custodians in Nigeria. I still think they're an asset management through that spin-off that they did. Their trading desk is the one I think if they spin off, if they do UBA investments, that's the Goldman Sachs right there. But let me also give you some figures. PE for UBA, this bank we're talking about, is 1.5, dirt cheap. What about the dividend? Remember, guys, I told you the average dividend in Nigeria was 10%. UBA's dividend yield 14.5. So if I buy UBA, I'm getting 14.5, which goes nearly your 15% you're talking about, and it's very, very cheap. And they're diversified. PFA, they're in the pension space, asset management space, investment banking space. They are also in Africa, Europe, and America. So is this still a hold for you or a buy? Again, I'm pushing back. I'm doing devil's advocate. So don't think for the guys listening, I'm doing this for all the stocks. So is it a hold for you or a buy?
It's still a hold. I want to see where the price would settle. Gotcha. Even though I don't think you're going to see much downward movement in price. But I mean, never say never. Yeah.
I hear you. All right, perfect. What about GT? Let's hop into the Orange Bank. GT, I can give you the figures. Again, buy, sell, or hold for you.
GT is a hold for two reasons, or maybe three, right? So the first reason is from a technical analysis. I do a bit of TIA as well. And the stock is trading close to, I believe, an all-time high. It's definitely close to a 52-year high. It had strong volumes last week in terms of volumes of shares traded. So if the stock pulls, one of two things that happen is either the stock pulls back, so people take profit, or the stock break a new high. Now, if the stock pulls back from a TA angle, I would go in. If the stock breaks a new high, I would hold, because I want to see if that high would settle. So that's my first reason for holding. My second reason for holding is they still have some additional capital raise to do. I I'm not quite sure how they want to approach it. They did the first phase, which was a retail Nigerian kind of thing. The second phase, I think, will be more institutional. So the retail side of things, they raised about 50% or so of what they were targeted. So the institutional will probably take it because, I know people hate the bank for the downtimes they get, but the honest truth, and I always tell people that if you're someone who wants to understand banking in Nigeria and what's happening there, what you should do is you should go listen to the last 5 annual or whatever. Just take all the last 10 earnings calls by GT. It's clear. So I'm on the fence because of the capital raise thing. Thirdly is I'm not sure what is cooking, but something is cooking because GT didn't give guidance for FY25 because they have it in the works. And in as much as you can kind of do your numbers and think about where they'll end, the absence of a guidance for me means that I guess maybe something big is cooking because I don't think it was because of, we aren't done with our capital raise, so we're not guidance. So, something could be cooking. I just don't know what it is. So, that's why I'm on the hold. But other than that, I think it's a great stock.
So let's talk about GT. So the numbers are saying that the price is overpriced. So i.e. the current price is overstated because there's a lot of demand for the stock. But there's reason for that. GT's return in 1 year, 66%. The Nigerian banks have collectively done 39%. So is it a function of the shareholders that are buying the shares are pushing the returns up, or the returns are going up and then the shareholders are buying the stock? Which is it? Which is the driver? Is it future earnings, or is it the FOMO? I want to buy this stock that's going up. What do you think is driving GTB? This is just a share performance now, not the numbers. Just why is the share price almost double what it's supposed to be?
Okay, so let me push back a bit, right? Now, I have the numbers somewhere. I probably can tweet it, so someone can tweet it.
Fair value is about 25 naira, but the current price is about 69. So I'm almost 170 overvalued on the pricing alone. S&P grade over 5 years, 10%, right? So it's growing, but it's overpriced, i.e. people are buying at this elevated price. So I'm basically saying, are people buying because they believe the stock is going to go up, in which case they are moving the price up artificially, or is it because really, like you said, something is cooking and folks are trying to get in early to eat that jollof rice that they are cooking?
I think it's actually maybe what I would call dividend FOMO. So the total of what? 8 naira and 3 kobo for FY24, which kind of shocked everyone, because when you look at the Fuga's Bank, they paid the biggest dividend. Then 2 is for a lot of people who bought during the public offer. Public offer, I think, was 44 naira 50 kobo. So I dropped, say, 44, 45K, and I'm going to get 7K or so on my 45K. So a lot of people, in fact, I haven't seen such excitement about dividends in a while since they did that. So people are wondering, this is a 70 naira stock. Can they at least replicate that this year? So if they can do another 6-7 naira this year, then it's not bad. 2 is when you look at tangible book value per share, which I guess is the most unused metric in Nigeria, because whichever metric you use, these banks are cheap. Price to book, price to earnings, and all that, they are all cheap. But if you look at the tangible book value, what I have is 112 naira and some fraction for GT. So yes, you can say that, look, GT is trading closest to its tangible book value, or maybe between GT and UBA are trading closest to their tangible book value of the 5 parts. From that angle, if you're looking at it from that angle, then you might say, look, this bank is worth maybe 100 odd fraction, 17 naira. there might be still maybe an additional 10 to 20% room to run further. If that is the case, so if I take, okay, maybe I get another 10 to 20% capital appreciation, I get maybe a 10% dividend yield. That's 30% potentially from now. So if you look at it from that angle, I'd say it's 50% FOMO for dividend and maybe 50%, I think something is cooking. Let me just sit in there.
All right. Again, just a bit of education. I know you mentioned the highest paying dividend. So in Naira terms, they are paying a lot of Naira out. But the dividend yield, which is actually what we measure, the yield is 11%. It's still lower than... So just the point I'm making, UBA dividend yield is 14, GT is 11. But because of the Naira amount was higher on GTB, investors believe the Naira of the dividend for GT is higher. Hence that FOMO you're talking about. It's just educational that we have to look at the dividend yield. This is for the folks listening, not the actual raw Naira paid out. Okay, I hear you. So guys, if you're listening, we're going to have you comment after we do the A and Z of the Fuga. So if you have a question, just hang in there. Once we get through with Access and Zenith, we'll allow Onome to take a few questions, but we'll then go to the other folks in the Nigerian banking sector. So the next one is Access. What's your Access take? Buy, sell, hold?
Access is I would say it's a strong buy for me, and this is why it says. I know Access gets a lot of hate because it's taking a while for their strategy to come true. So a lot of times, people often joke that, look, what else are they going to acquire next? Are they going to acquire a central bank? What do they want to acquire next? They've had to do a lot of acquisition, but when I look at the strategy, it's actually making sense. For Q1, aside from it, there was a decline in profits for African units compared to Nigerian units. Or you can see where they're going, which is to say, if you can grow African revenues at, say, maybe 20%, 20-25% for 5-6 years, they probably would aim higher. And if you now assume they can push their profits after tax for the African units, they can push it 20-25% for, say, 5-6 years. It would be good. So to me, it's like a kind of watching UBA in the early days, right? So the stock has suffered because people are waiting for that to come to fruition. But when I looked at my model, from a capital appreciation perspective, Access has most upside from potential upside, so nobody wants for that. From a dividend perspective, they also have the most upside. Now, the only problem I have to stock is operating expenses are a bit heavy. Yes, you might say, look, they've done what's the last 20 odd years. They had two major transactions. There was a merger with Diamond Bank, then there was the Intercontinental thing, and that helped to skyrocket things. But I feel that, and I don't know, but this is just my gut feeling, I feel that operating expenses need to come down a bit more with Access. And secondly, I don't know if the regulator begin. So that's the only headache I have with Access. OPEX is heavy. I don't know if they have fully, or if they've, what word will I use? They fully put together the costs from all those two transactions. So that's the only come out from. Other than that, I think Access should do way better this year compared to last year. And from a cost perspective, valuation perspective, I think Access is probably cheap as First Bank compared to all the other gas banks.
So is Access pursuing a UBA strategy?
I'd say maybe UBA plus. The plus is in the sense that they're looking into what digital lending and payments, and those units are doing quite strongly well. And and then they have the PFA, which is doing amazingly well. So I would say a UBA plus. So let's spread around Africa and let's also spread our sides back in Nigeria. Yeah.
I hear you. And again, the stock is slightly not expensive if you compare with the all Nigerian banks, but when you compare with the Fugans, I think it's the highest PE ratio I've seen, about 1.8. When you compare with Fugans, but with the whole banking sector, it seems about okay. So I hear you. I take it. Let's do the last one, Zenith. Zenith is a very, very interesting stock. What's your take there? Buy, hold, sell.
Zenith is a buy for me. Buy for two reasons. Historically, Zenith and GT typically trade about the same price level. And I know, yes, one has more shares than the other and all that. But if you're looking at it from profit and revenue perspective, they usually trade about neck to neck. But Zenith had slightly weaker results last year because they had slightly bigger impairments compared to GT. So they could, obviously because of that, they couldn't pay the kind of dividend that GT paid. So I think that Zenith, in my mind, I have a video somewhere where I just kind of worked out the numbers. I think Zenith should, within a year, be priced to where GT is trading at. And two is dividend payments in total for Zenith was, I think, what?
Five naira.
Yeah, 5 naira. I think that if they can push it to a 6 naira, which is doable, if they're able to do a 6 to 7 naira, right? I mean, if you work out the dividend yield for Zenith, since it's trading cheaper than GT, is way better than GT. So they're going to do what? Probably a better dividend. Profit-wise, they're almost neck to neck. So I think Zenith is a buy for me. And two is they've also concluded their cap raise, right? So they're not raising capital anytime soon. So that kind of gives them breathing space to really focus on sweating returns. So it's a buy for me.
So Zenith is one of those $1 trillion banks we're talking about. Their dividend yield is 10%. So if you bought property, rent is almost as much as if you bought Zenith Bank shares. What I'm going to is that they make $1 trillion, but investors could get 10% dividend yield. Any comments on that? I'm trying to say it's kind of low I hear you, but 10% is not. GT did more than that. Like, why did they pay so?
Because they were tight on cash, right? So if you look at the cash flow statement for Zenith for last year, they were a bit tight on cash, and I'm not sure whether it was a kick of the CRR team, because if you notice, you have a lot of banks doing commercial papers and like liquidity squeezed. So they were a bit tight for cash. But I feel some of what contributed to that was the impairments that they took. When I look at the Fugas banks for FY24, impairment provisions for Zenith were either Zenith and First Bank had the highest impairment provisions.
I see.
So yeah. So for last year, it's among the Fugas. So it's possible that contributed to it. But I think this year, for at least Q1, I don't have numbers off heart, but I know impairments have come down year on year. So there should be a bit more cash to play with. And I suspect, if I recall correctly, that for most of for Zenith, yes, you had your offer closed last year, but I think it's this year that cash actually kicked in from the offer. So that's money you can deploy into securities or whatever, and then yield returns. So I think they should do better compared to what they did last year.
All right, great summary there. I think we've done First. If I understand you, First you were a sell on First, UBA you were a hold, GT you were a hold, Access you were a buy, Zenith you were a strong. I think Access you were a strong buy or just buy.
Access is a strong buy for me.
You're a strong buy.
Zenith is a strong buy for me.
Okay, so we had to. So okay, fantastic. I mean, you've given your reasons why. Let's get a few guys to sort of take you up on that, or in case they have their own questions. I've got Shola Ogunyemi. Shola, you've been hanging around there. I appreciate you. What's your question? Please go ahead. Shola, you ready? Or let's jump to Oxley Tech. Then we'll get Shola when he's ready. Oxley Tech, you have a question. Oxley Technologists, Oxley Consultants. What's your question for Onome? I have a few in case you guys don't already.
Okay, so quick one. So I don't know whether you can hear me.
Yes, I can.
All right. Okay, so my question is, I just wanted to get his perspective on First Bank. It seems First Bank has remained on this very high impairment payment that they are doing since probably 2016. I'm heavy on First Bank, right? So the impairment has been there, and it's always been oil and gas. I know they have a lot of exposure in oil and gas. So is it that this there is no end to this impairment, that at any time you look at their financials, they are always on high impairment? That's number one. Number two, it looks like the First Bank African subsidiary adventure is failing, because I know that First Bank, for them to have gone to some subsidiary, they bought some banks all over the place. They bought some existing banks in Guinea, in Ghana, in DR Congo. Most of those banks that they went into, they didn't establish it from the start. So you just going to those places, buying over banks, and they have not been able to turn it around. And I don't think much money is coming from those subsidiaries. So I'm comparing it with UBA. Are we saying that the First Bank African subsidiary adventure has failed, basically? So those are the two questions that I have.
All right, thank you. Appreciate that. Onome, he's asking about UBA, compare that to First Bank. What's your take? And also that First Bank impairment. He's right. Is there like a time limit or till it gets to zero?
Okay, so let me start with the impairments, right? So I'm going to behave like the First Bank staff, and I'm sure there are First Bank staff on this call. I'm pretty blunt, so apologies if you are pissed. During the call, right, and people had asked them like, look, here was this spike in payments, they dancing around the question. So really what caused the jump in payment provisions for last year for First Bank was an oil and gas loan, right? Now, they didn't mention the oil and gas loan, but everybody knows the oil and gas loan. So I'm not going to help them by mentioning it, but some other banks mentioned the oil and gas loan. So it was an oil and gas loan. So it was an industry issue with an oil and gas loan that caused the jump in impairments, right? So yes, it's true that they've struggled for the last. In fact, it almost became like a joke whenever you look at First Bank results, because you always knew that impairments would be high. And I feel that they have a new group GMD. So I'm of the opinion that, hey, let's give this guy a year and let's see what he's going to do. I think that you need somebody who's going to break things a lot to really get that bank to fast. So it was a systemic issue for that caused last year's spike in payment provisions. Two is, when it comes to their African subsidiaries, I don't have the details, because if I'm looking at First Bank Q1 numbers, this is a 45-page document. They typically don't split the details of the African subsidiaries. So if you look at a UBA, GT, Access, I think Zenith, you have that whole leader African country one by one, or you have Africa bundled together. So First Bank doesn't give that. So I really cannot speak to the performance in those subsidiaries. But if you look at it historically, or if we were to assume that it function in the same manner, for the banks, in other profitable subsidiaries, you would have Ghana has always been profitable before the whole issue they had there with default. Ghana is very profitable for West Africa generally is profitable, bits and pieces of Africa and all that. I mean, a great example, if you want to kind of figure out what's working fine and not, is you can take UBA, GT, Zenith, and you put all the African subsidiaries together. I think Access and GT provides, and UBA provide the most color on that. So I don't know about the First Bank Adventure, it's profitable for that, but at least Ghana is so yeah. So I think I've answered the question.
Sorry. Yes, I think you have. But maybe, the First Bank subsidiaries, African subsidiaries, and the UK is owned by First Bank Nigerian Limited. It's under First Bank Nigerian. It's not directly owned by the FBN holdings. So it is the First Bank Nigerian Limited that owns those subsidiaries in Africa and the UK, and FBN Custodian. FBN Custodian is also owned by First Bank Nigeria Limited. So I think that the result should actually come out not in the FBN holdings, but in the financials for the bank, because those companies are not owned by the holdings. The only company that is owned by the holding company is First Bank Nigeria Limited and FBN Quest. Every other of these subsidiaries is a bank subsidiaries, First Bank Nigeria Limited. So if you want to see it if you look at the financial of the holding companies, you won't see it. I don't know whether you get my point.
I get your point, but the thing is, there's no visibility to those numbers. What's sent to the stock exchange is the holdco numbers, and the holdco numbers don't have visibility on the rest of Africa. So I don't know what's happening there with the rest of Africa and every other place. That's the thing that we need to do better.
Do you think it's deliberate that somebody is trying to, because for UBA we know what's going on with the UBA subsidiary. Do you think that it's deliberate? First Bank, first custodian, and all the 6 or 7 subsidiaries of Africa, nobody seems to know what is going on with them, except you have to just look at them as the bank numbers. Whatever that the bank, First Bank Limited reports is what they are. Nobody seems to know, because I am interested to know what is going on with those subsidiaries in terms of the numbers. But it's okay. I get your point, though.
Gotcha. Yeah, interesting comment. All right, and let me take Shola Bomi. Shola, are you available?
Hello, can you hear me?
Yes, I can.
Hello. Okay. Oh, thank you very much for this platform. I don't know much really about stocks, but I can still try to understand the returns and the probabilities you've mentioned. But my question is, because this, we're in the 21st century now. So if somebody wants to invest, is it that the person should just try to check for stockbrokers, or what should be the first step in investing in stocks, particularly banking stocks in Nigeria?
So that's assuming you've done your research, you have your education, you know what you want to buy and all that. Okay. So
sorry, and now this is in the sense of somebody who is not that financially very literate. So the person needs education in
Correct.
terms of, yeah, exactly.
Yeah, the first investment you want to do is the investment in education. And if you go to YouTube, for instance, if you just put stocks for beginners, there are lots of free resources there. You can watch a video, know what the bull market is, know what the dividend yield is. So that's your first investment. Invest in the education part of it, right? So let's assume you are out of education. Maybe you know a bit more now. I would always advise that if you want to buy equities, you go through the index side first, not the individual stocks. So instead of you buying, for instance, rice, you want to buy the entire market. You want to buy rice, yam, tomato, fish, everything in the market. So if yam doesn't do well, fish should do well, non-correlated and all that. So I would say for you, a new person, try to buy the index first and understand the market as you go along, right? Now, how can you buy the index? What is the index? Index is just everything in the market. So in Nigeria, we have the all share index, America, you hear S&P or you hear Dow. When you buy those indexes, you are buying all the constituents of that index, if that makes sense, right? So how can you buy it in Nigeria? Nigeria, there are two ways. One is the traditional way. You go to any stockbroker that is registered by the Securities and Exchange Commission. So there are many of them online. Just go online and just do, if you want, I'll send you the link. You can just look and see who is registered. But any registered firm, so registered stockbroker in Nigeria, you can buy from them. Most of them have online presence. Many of them, you can buy from them. The other way is to go through the apps. I believe we have 3 apps. There's Bamboo, there is Shaka, there is Cowrywise. Am I missing anyone out? I know of these 3 that are licensed to buy stocks. So if you go through them, you can also buy stocks in Nigeria. So those are the 2 ways. I would say start from the index, do it online. That's a good way to start and learn. As you learn, then you have to branch out. Yeah.
Okay.
Does that help?
Thank you very much. Yeah, it does. It does. Yeah. I'm very much aware of Bamboo, but I think I just got to know that it just selling stocks just quite recently. So
yeah, essentially, those things are all just the front office. They are actually connected to stockbrokers. So Bamboo itself is connected to a stockbroker. All you are doing is that when you go online, because we're in a digital age, you can place your order with Bamboo. Say when you do Uber, right? You get a taxi, but you're going through an ISP. Just look at it that same way. You are buying your stocks through Bamboo's front office, but ultimately it's the stockbroker that is buying and selling for you. So if you want to buy America, I can give you, VT. If you Google VT, that's you're buying all the stocks that are good in the whole world. You're buying Apple, you're buying Samsung, you're buying Mobil. Just when you buy VT, that's an ETF. You Google VT, tons of stocks in VT. If you do VTI, you are buying only American stocks. It's an ETF, only American, so that's VT. Let's say you want to now buy only stocks without the US, that's VTUX. So that's VTUX minus the US. So you see, you can pick and choose where you want to invest. You can buy Nigeria, you can buy UK, you can buy Japan, you can buy. It's now easier for you to do. So I would say if you are starting, keep it very, very simple. Buy the index funds because they are cheaper. You can diversify at a lower cost. Understand the market before you then start to buy individual stocks, because it takes you time to understand what a dividend yield is and what the earnings report is, things like that. So the more you get conversant with it, the more you get, better as an investor. Yeah. So take it slowly. Yeah.
Okay, thanks very much.
You're welcome.
I appreciate it.
Yep, you're welcome. Hey, Onome, I've got Afribull here. Afribull, I don't know when you joined. I just saw you pop up, but Onome was taking us through Fugas, and he gave us his results. What's your take on Fugas or the Nigerian stocks or Nigerian banks in general?
Hi, Carlo, can you hear me?
Yeah, loud and clear.
Yeah, no, I've been in the room for since the start. It's more of a learning session for me. Banking stocks always outperform when it comes to the Nigerian stock market. If you look at the banking index, that has significantly outperformed the all stock index to date, and that seems to always be the trend. But a lot of things that we touched about. What I really want to, if I get questions on the matter, is regarding the recapitalization efforts. Some of the mid-tier banks seem to be struggling, and I was wondering if he had any insight whether acquisitions or mergers are on the table, and if they are, how advanced have those discussions gone?
Yeah, we were going to do the mid-tier banks immediately now after the Fugas. I was going to now take him up on the Stanbics, the Fidelities, the Sterlings. Onome, how do you want to do that? Because that would answer Afribull's questions. I have a short list here. I have Stanbic IBTC, I have Fidelity, I have Sterling, I have FCMB. Who am I? EcoBank. I think this is I'm not, because we really can't do all. And I also have Jais. I don't know if you follow Jais, but I like that concept. I like to always review what they're doing. Do you want us to take it now? I want to start from Fidelity.
Sure. You can run through all the banks,
Okay.
and tier 2 banks and tier 3 banks, and I'll take the question. I'm taking notes, so I have the question.
Gotcha. Because after people,
right.
that will sort of answer your question about the mid banks that are struggling in terms of raising finance. So let's just start from Fidelity. So what's your take on Fidelity? Buy, sell, hold.
Fidelity is a hold for me, but on a fundamental basis, I quite like the bank. If you look at the Fidelity numbers, Fidelity is one of the few banks in Nigeria that makes a chunk of money from retail banking. So even when you look at some of the Fuga's banks, retail is struggling. If you look at assets, as big as assets is, I think retail south, retail north, because that's how they split it. It's about 600 and something billion. And when you add the profits, Fidelity probably makes more money from core retail compared to assets, right? Which is weird, and all that. So I like the bank, but as for me, I'm not buying anything that can be potentially diluted. That's one. Two is their stage 2 loans are a bit heavy. So Fidelity stage 2 loans as a Q1 is about almost 1 trillion naira, right? I think if memory serves me correct, they have a 4 trillion loan book, 3 point something trillion stage 1, 900 and something. That's essentially 1 trillion. Stage 2, and then stage 3, it's like 100 odd billion. So for me, that's a orange flag for me, because if three, by how much are you going to move? Come down, right? Stage 2, if I recall, in December was around 1.1 trillion. So it's come down, but it's still a bit too heavy, because if you have a 4 point something trillion loan book and your stage 2 loans are by 1 trillion, why is it so heavy? So that's a red flag or orange flag for me. Other than that, I quite like I like the strategy, but I'm just not going to buy anything till they are done with their capital raise.
Let me give you a few numbers again. So Fidelity Bank, the average shareholder return for Nigerian banks is about 39%. Guess what Fidelity is doing? They're doing very, very well. They're doing about 128% return on that angle. If you just look at shareholders' return. So very, very profitable bank. Gross margin about 48%. So they're doing about 128. The market doing about 39%. Gross profit about 48% or so. Stock is slightly expensive at 3%, 3 times PE. But like you said, this is a fast-growing mid-level bank. But you're not touching it because they haven't done their recap. Is this bank at a discount now if we look at future earnings, or do you think even with the recapitalized size, you think it's going to be at a premium? Why aren't you buying even at this without their recapitalization? You're scared they're going to be diluted out? You know where they're going to go to, right? You know where they're going to go to. They're going to raise capital to meet CBN. So you already know that number. But as you look at this bank right now, do you think it's a discount as a mid-tier bank? Do you think it's an access bank in green? What do you think?
Let's discount the price, right? So Fidelity is trading around 20 odd naira. Let's see what it is. Close Friday at 20 naira, right? Mm-hmm. So let's discount and let's say maybe you have 20% dilution, raise up. So let's say maybe my ideal entry point ideally would be maybe 16 to 18 naira a share. Mm-hmm. Then I could factor in dilution. Some people might tell you that if they continue at the trajectory they're growing, they probably would join Fuga's banks in another 3-4 years. And I think that, so I just need it to come down a bit lower than where it is.
That's the price.
And hopefully, yes, a price. I need the price to come in. But it's cheap because even if you're looking at it from a revenue perspective, which I like to do, because even though that's not the classic way, it's easy for people to understand. I mean, they're doing, you should end FY25 probably over 400 billion in revenue and profit after tax, rather, not revenue. So the question is, for a company that is trading around 1 trillion, and they're going to make a profit after tax of well over 400 trillion, billion, it's cheap. So Fidelity is cheap. I just feel that it can go a bit cheaper because of the cap raise that they want to do. And so then I'll probably after that.
Interesting you said that Fidelity may join Fuga's in 2 or 3 trades if their earnings continue. Very, very interesting. Yeah. So, I mean, again, it's a fast-growing bank. Dividend yield 12.5. Nearly, it's higher than the GT, or it's about the same range as the GT and Access. UBA still beats it, but you're buying a bank that is fast-growing. Debt to equity ratio 118. That's high. But again, like you said, they are doing a lot of lending. So if you compare the Fidelity Bank to, say, the other banks, these guys, their books, Fidelity Bank's books, has more loans in it. Are they also your quote-unquote interest-driven return bank, or do they do more loans, i.e. Fidelity?
No, it's more of loans because, I mean, this is 10 trillion in assets. I think loans are around 4-point-something trillion. So that's 4 over 10 is 40% of the loan. That's our loans. So yeah, they're quite heavy on loans. Okay,
I hear you. Let's go to, and this is a hold for you. Let's go to Stanbic IBTC. Stanbic IBTC. Buy, sell, or hold?
I think of all the tier 2 banks, this is the most difficult one for me. It's not a sell, so that knocks off sell. It's not a buy because it's not exactly cheap, right? But it's also unlikely to reprice lower anytime soon because it's not very liquid and it's majority owned by South African guys. So I would say I'm in between buy and hold because if you take the Q1 25 earnings per share, it's around 6 naira or so. If you annualize it, meaning you estimate that they maintain that all through the year, it means they could end FY 2025 somewhere around 20 to 25 naira in earnings. So this is a 60-something naira stock. So that means forward earnings is trading at 3-point-something times. This is cheap, right? So it's I would say if you are a passive investor, you can just buy and lock up. If you are a bit active, you can hold. And if you have a bit of downside in the market, so you can start to enter. Maybe 10-15% downside from where it is at the moment.
Is this an interest bank or is it a loan bank? If we could use those terms loosely, are they making more money from just that interest income or is their loan book really active?
I mean, let me use the Birdman quotes. If you're a hip hop head, you know who Birdman is. Respectfully, Fidelity Stanbic is not a bank. Stanbic is more of an asset management and PFA wrapped in the clothing of a bank. So more of the money. I mean, interestingly with Stanbic, and this is one of my grouses with the whole universal banking thing. Look at the numbers. Personal banking is struggling, right? It's been running at a loss for quite a while. So if you look at Q1 numbers, they made a loss, which is weird because you might wonder, I mean, how are you losing money in retail banking? But, well, that happens. So there are more asset management, corporate and investment banking than retail and all that. So, yeah, more of an. So, I mean, but that's also an advantage for them because you don't have the headaches that come with retail banking and all. But you might then ask yourself, in an ideal world, wouldn't it just make sense for them to just spin off retail banking and just focus on asset management? But Nigeria is not an
Which is where they were before, in all honesty. They were there before, right? They were just in their one branch in Lagos, IBTC Investment. We know the IBTC Equity Fund. That was what they were doing. They were more or less the Fidelity, right, in Nigeria. But then they had to raise capital, more or less. I remember back then the chairman was asking Soludo, why 25? Why not 100? Why not 12? But that's what has passed on the bridge. Their gross margin 100%. That maybe aligns with what you're saying. Gross margin of 100%, but net profit margin of 41%. What's going on there?
I'm not too sure. But hold on, I'm looking at the numbers. So let's look at their loan book. 7.3 trillion in assets. Loan book is tiny. Loan book is what? 2.4, which is quite tiny.
Yeah.
Impairments are fine. They actually had the right back. OPEX is a bit high. So maybe that's cheese from OPEX.
Yeah, it's from...
I think, OPEX seems a bit high for me. Because if your loan book didn't grow that hugely, and you don't have a large loan book, so where is the pressure on OPEX coming from? Impairments are pretty much almost non-existent.
So if we go back to your point about there being an asset management firm wrapped in a banking license, where is this OPEX coming from? Are they opening new branches? Is it salaries? What's the AEX in that OPEX? What is it? Do you know?
Staff costs didn't go up so high, so I don't think it's a staff cost thing. Generally, when you look at the banks, it's all what most banks do is that they tend to front load their AMCON charges, right? So that's what they do. But I'm looking at the OPEX. As other than 65.4 billion in OPEX, AMCON is 22.8. IT went up 12. So other than that, OPEX is pretty much just there. So I guess it's between AMCON and IT expenses.
Interesting. Yeah.
Yeah.
All right, perfect. And the dividend yield is very, very poor. This is 7.7. So just putting that out there. It's if you're buying this for income, might be in the wrong boat. 7.7 dividend yield, not too good. So let's hop to FCMB. Interesting bank, FCMB. What's your take? Buy, sell, or hold? I'm not even interested. This FCMB was the first Nigerian-owned bank, correct? FCMB was the first Nigerian-owned bank. That's correct statement, right?
Yes, that's correct.
Okay. So what's your take? FCMB, buy, hold, sell?
FCMB is a sell. It's a sell for two reasons. First reason is that they still have some capital to raise. Second reason is that it's lagging. In an ideal world, I think, in fact, for me, FCMB is more of a merger/acquisition app play. That's the way I view it, because the stock is grossly undervalued, right? Way undervalued. I mean, what's you're looking at the market cap. I think the market cap is what, 200 and something billion. And this is a company that probably will do what, 100 and something billion or odd billion in profit after tax. So the stock is massively undervalued. The challenge for me is I think FCMB isn't as efficient as a Fidelity. Because when you look at the asset base for both of them, right, it's about the same 10 point something odd trillion in assets. But while a Fidelity is doing 90 something billion in profit after tax, a Fidelity is doing 30 something billion. So I'm now wondering, why is your book, why aren't your assets delivering more? So it's a no for me from that angle. But I like the model that they are running. I just feel that they need to scale up a bit. So if in my view, I think they need to either merge or acquire a bank to help them scale. Yeah.
I mean, just to back up your numbers, I mean, it's a very expensive stock, 5 times PE, so 5 times earnings at the current price, very expensive. Gross margin is 99%, but if you then look at the net margin, it's 20%. So in there's a 70% cost somewhere floating around that bank. Again, do you know where that cost is coming from? Is it the impairments? Is it staff salaries? What's 90 to 20? Do you know what that cost is? Because that would help us to know if we can.
It's definitely not impairments. Impairments actually came down for FCMB. Personnel costs were up, general administrative up, so it's more of an OPEX issue, which is weird because when you look at their branch spread, it's not so heavy and all that, but it's more of an OPEX issue. Because I'm looking at the usual line items, they are all up. Business premises and acquisition costs, advert, promotion, and corporate gifts. It's more of an OPEX, the usual OPEX issue and all that. Cost of operations and everything. But typically, tier 2 banks tend to run with a higher OPEX. Maybe if you take Sterling, FCMB, Fidelity, maybe Stanbic might be the exception, I think. Tier 2 banks typically have higher cost-income ratios compared to tier 1 banks.
So, I mean, again, this is a very, very cute bank, you know. It's got the banking, it's got the PFA, it's got the investment banking, it's got the stockbroking. They do this thing where you can walk into the bank, and if you're, I think it's a civil servant or salary earner, you can get a loan in about 24 hours or 48 hours. So it looks like a Rolls Royce. Like they've got everything, but like you said, it's still like they're not really breaking out and sweating those assets and making a lot of return. They are underperforming the Nigerian banking index. They are 21% shareholder returns. Banking index is about 39, but they are beating in markets about 10%. So I hear what you're saying. So just maybe couching what you're saying. I'm not sure if it's a sell. I think they have certain attributes, especially that PFA license. That's the money spinner. And again, it gives them access to more things. Mortgages should be one for them. I wish they would chase that down, because with the PFAs, you can do mortgages. I just think they can do more with the assets that they have and with the reputation that they have, you know, and all that. That's what I just feel. Someone is asking me, he thought Wema Bank was the first Nigerian bank. I know Mr. Shumubal was the first Nigerian to get a banking license. What of Wema? Was Wema, were they a corporate? I know Wema was like a cooperative, right, that got licensed even before Nigeria got independence. Do you know exactly the difference between Wema and FCMB? Who was first?
Wema is the older bank.
Yeah.
But the thing is, Wema kind of started out as a private limited liability.
Yeah, like a cooperative. Yeah. Something like that. I know Wema, it had a long name, Oluwa Logmore Bank, something like that, right? It had a long name, then it became Wema. I can Google this stuff. If you guys know, just share with me if you know Wema's history compared to FCMB. I know Mr. Shubemi was the first Nigerian to actually get the license. I'm not really sure Wema's, but if you guys know, please share with me and I'll do the education. All right, let's go to Sterling. Sterling's on that bank that I see. They look like a bank that is, you know, really, really punching above their asset base. But what's your take on Sterling? Buy, hold, or sell?
Sterling is a sell. It's a sell for me for one reason. If you look at the cost to income ratio, I think they're pushing around 70%, right? Mm-hmm. So that's a no for me. But I like the spirit behind the bank. They do a lot of experimentation. They're very pushy on social media, which is nice. But if your costs are so high, and I can't quite wrap my head why their costs are high, because I don't think of them as top 5 when it comes to branch spread. So if they can bring down their cost a bit, then sure, it should be an interesting bank. But I'm of the opinion that I think if we don't see significant scale in 5 to 6 years between Sterling and FCMB, one of them is either going to be acquired or one of them is going to merge with someone else. Yeah, but I like what they do. They kind of remind me of Google in the early days. There's a lot of experimentation. There's a lot of pushiness and all that. But from a profit perspective, I just feel that it's a no for me. Yeah.
So I agree with you. They're very visible. When I say punching above their weight, if you call 5 banks in Nigeria, Sterling comes to your lips. Even though they're not really a very, very big bank, but they are out there. People seem to know and recognize that bank. And I'm not really sure why. It's a good thing. It's a good thing. But, like you said, the numbers have to back up what they are doing as well. So you say it's a hard sell for you. You want them to merge with someone that's your final answer.
Yes.
All right. Let's do Wema. So Wema, what's your take on Wema? Buy, sell, hold.
Wema is a hold. They're doing all the right things, but and this is my problem with the whole in my view, I think that the whole recapitalization could have been structured by the CBN in a better manner, because when you look at some of these firms and what they're going to do with the money, it's clear that sure, they needed capital, but they didn't need this quantum of capital, especially the Focus Bank. Because why are you raising to tell me, we're going to expand branches? If it was that pressing, they'd have raised money since. Even though some of them would say, hey, well, we're in the works of raising money. So for me, Wema is doing great, but the question of Wema again I would ask is, they are a regional bank at the moment. And they're growing quite well. I quite like the loan book. NPLs are pretty much low. Loan book looks clean. But the question now is, what do you want to do? Do you want to become a national bank? Or do you even want to push further and say, hey, let's look outside the country? So I'm not clear yet on what they want to do. But if I'm looking at just the Q1 numbers, the Q1 numbers are great. They have an interesting strategy. I'm not sure why. But if you look at their balance sheet, they are very heavy on bonds as compared to T-bills. So I wonder why. But I guess they have tangible reason for that. So I like the bank. I just won't buy because they're in the middle of a capital raise. But after they've raised capital and I see where the price is, then I can maybe reconsider.
And it's a very profitable bank. That's i.e. Wema. They're doing about 91% return, right? Again, the Nigerian banks about 39, so they're doing way 91%, almost like Fidelity Bank. And they have this online thingy where almost every fintech thing I do, I see Wema pop up. Either you're going to pay through Wema or you're using Wema. So it seems to have collected that side of the market and just locked it up and said, listen, we are the owners of fintech, settlements and all that kind of stuff. So very aggressive. They seem to also have sorted out a few of their internal issues and are on the pathway. So your final take is still that you want to wait. You don't think it's a discounted stock at 2. It's expensive, 2.7 times PE. When we compare to Zenith Bank and the rest are about 1.7. This is an expensive stock, but so you don't want to change your mind there. You are going to just hang out there. 7.2% dividend yield. You're good?
Yeah. Wema for me is more of a growth play than dividend. I don't see them paying a big dividend anytime soon. But in terms of growth and return on assets, they're doing solidly well. So even from that angle, you might argue that, okay, you won't have much of a dip.
Yeah.
But from a price perspective, I don't know. I'd rather wait after the fundraising is done, and then one can check out where it settles at.
Okay, that's an interesting bank. After this, we're going to let folks speak. So if you guys have a question, we're going to let Onome just take your questions. I'll have a lot of DM questions for you, Onome. Let's take Jai's Bank. Again, very, very interesting bank. If you don't know, Jai's is a non-interest bank. So they don't charge a traditional interest that banks charge. Onome, buy, hold, sell. What's your take? Do you follow? Do you track Jai's? I can give you a few numbers.
I'm waiting for audited full year numbers.
Right,
yeah, those aren't out yet. I know the thing about banks is you never can tell. Well, I like the model. I quite like the model. My only issue would be scale, because when you look at the asset base, it's tiny. 1 trillion in assets. That's rather small. I suspect that, and some of the fintech guys will be happy. I suspect that some fintechs that probably have this in assets, maybe one or two. So it's small, right? I'm not a fan of small banks in Nigeria, because Nigeria, in my view, isn't a place where you should play small. I also feel that profitability-wise, it's a no for me, because you have 1 trillion in assets, and your profit is what, 24 or 25 billion essentially. That's poor, really. So, I mean, it's an interesting bank, but they need scale. So, if they scale up, then it looks interesting. But from a cost perspective or a valuation perspective, it's not very expensive. EPS 70 kobo, and this is it. What, current price 3 naira, so that's 4 point something in the PE ratio. Okay, that's a bit pricey for tier 2. It's interesting. I'll wait till I see their numbers. So I would say it's a hold for me.
Let me give you a few numbers. So about 846 employees, PE 5.8. So if you're buying at this 3 naira, you're buying it at 5 times its projected earnings. What else have I seen here? Their return is about 37. So they are underperforming the Nigerian banking index, which is about, Nigerian banks, which is about 39. So they're underperforming, right? Let's look at their gross return. So gross margin 98, net margin 39. So this number of employees are still eating about 40% OPEX in there. I do not know if you know if that OPEX is impairments or just OPEX. I'm not sure if you have that number. Dividend return is just 1.2% dividend yield. 1.2. That's very, very low. Again, are we looking at the bank using the wrong lens because they're not interest banking? Should we look at, isn't this supposed to be profit and loss? Is that profit and loss translated via the dividend yield? How do they share the profit and loss with this? Because the model is non-interest banking. Is it shared through paying dividends? How do I get my profit and loss if I invest in this? I don't know if you get my question. How do they share that? Yeah. How do they try?
Yeah, I do. I mean, so they pay you dividends like a regular bank, if I remember. And I do own shares in J's, I think. So yeah, have I gotten a dividend in the last 5 or 6 years? I'd have to check. But here's an interesting fact that I know anecdotally. J's Bank is probably one of the biggest holder of Sukuk bonds in the country, right? Because remember, they're non-interest bank. So I know that a large number of their investments, when I look at it, the assets are what? 1 trillion in assets, about almost 350 billion of that is in Sukuk, right? So even though, I mean, you could argue if those Sukuk bonds are they really non-interest bonds, or are they just wrapped around? That's a different convo. So yeah, they pay you like a normal bank, but you have a lot of money in Sukuk, because if your assets are 1 trillion and you have about a third in Sukuk, then what else is left? Because between that and cash and bank balances with the CBN, that's almost half of your asset base. So I mean, it's an interesting bank, really, but I'd wait till audited numbers. And I have the same issue with Sterling. What I've heard is that for the non-interest banks, they're kind of working on tweaking their reporting standards and all that. So that's one reason why you've had a delay in them. So let's see how the audited numbers shape up. But they are tiny. Scale is key in Nigeria, so they need scale.
So I mean, Sukuks are paying about 16 to 20% in essentially. So is it that they're not lending? Is this more of they are doing investments and the investors are not paying them enough and they're not lending? Is that what's going on here? Hence the lack of superlative ROE.
I mean, there's some lending, but it's not heavy, right? Because if your loan book, a third of your loan book sukuk, cash and bank balances with CBN is 200 odd billion.
Yeah.
So what's left for you to lend? Inventory finance, 5.7. Lending isn't enough. Yeah, I mean, it still goes back to my point that Nigeria is just a tough place to lend, even though for them, what they kind of do is more of a partnership kind of a thing. So we could do business together, we'll make a return and share the return rather than be lending the money. The question is, can you do that at scale in Nigeria? Right? Can you run 100 billion or 200 billion size portfolio with that model? I don't know. I doubt it.
Yeah. Just making sure. So, guys, I all the questions on my DM are which one should I buy? That's the wrong question, guys. It's like asking me which car should you buy. You've got to buy the car based on what you want to use the car for. So, if you want to go to Kano and carry cement to Kano, you want to buy a 911. If you want to go on a date in Lekki with your girlfriend, you're going to buy a sports car, right? So, different stocks have different use. If you notice what number is saying, sometimes you talk about dividend, talk about what their future projections are. If you're buying a stock that you want to double in price, you're looking at a second tier bank, i.e. the per share price will double. But if you're looking at dividend yield, you look at a more matured bank that is already mature and will then pay you out a cash dividend out. So just keep that in mind. You really can't compare these banks to banks unless you're comparing like to like. Even in Nigerian banks, Sterling and Fidelity will be in the same like than, say, Zenith and UBA. So make sure you are comparing like for like, projection for projection, and asset base for asset base. Always important to do that. All right, let me get a few guys to speak in here. But then we'll go to the last part of there are a few banks I think we can still cover and then just take questions. Let me get OD Christo. Is it OD Christopher? Did I get that right? ODY Chris. He's not ready to speak. Let me ask you a few questions from my DM. Someone is asking here, UBA is UBA's presence in America a factor in their returns? Someone is asking you, is UBA's that presence in America, does it add anything to their returns? Do they have any deals there that say Access and Zenith cannot have? Or is it just I think where it's going to, I don't read that part, is that it's more of a PR thing than it's actually a market or earnings driver. What's your take on that?
That's a tough one. So off heart, I know that the African subsidiaries are doing quite well. They are all profitable, right? So that's the first thing. UBA America is profitable. But when you look at it, the question is, what do you want them to do, right? There's no way they'll win a retail banking play in the US. So at best, you do your usual corporate banking. Is it a PR thing? I don't think so. But is it the most optimal of branches? Maybe not. But I don't think you lose anything, right? I don't think you lose anything. But obviously, that's not top tier when it comes to where would I want to set up a branch as a bank. So I don't think it's a big deal, but I mean, it's always useful. But you might then ask yourself, even if you want to exit, who do you exit to? As a question, how much are you going to exit at? So I really don't think it's a big deal. Obviously, if you're 2025 and you want to set up and expand, America wouldn't be the first place and all that. But since they're profitable and they're there, I don't think it's a problem.
So, I mean, it's better to be there than not to be there. It's because I think the point of the tweet is, the DM is like, it's more of a marketing thing for them. They can go to the US and say, well, they only bank there, but they're not really doing business per se. He's saying they're not really doing, that's where he's going to. So, that's a bit of guidance to that. I'm not sure if you have this answer. Let me just ask you, in terms of microfinance banks, do you track them? Someone is asking about Kuda and Andres. Are those also on your agenda?
Yes and no. So I I track the smaller banks. There's MPF Microfinance. I track that. I've been there for 6-7 years as a shareholder. So I track it obviously because my money's there. So I track MPF. I track the mortgage banks as well. There's Infinity Trust. There is Abbey. So so essentially I track all the other smaller banks as well.
So I have questions for OPay and VFD Microfinance Bank. People want to know, how are they set up? Could they be banks tomorrow, especially Kuda? Someone is asking here, is Kuda going to get a license and become a bank, or is this just their strategy to remain as an online bank? What's your take on Kuda?
So disclosure, I'm a user of Kuda, so just in case anybody feels I'm biased or not. But in my view, right, and this is just my own view, when you look at it, there was a lacuna of some sort for MFBs, right? And then which obviously the rules went there at the time. So what Kuda did was say, look, we are a microfinance bank, but we have an app. So we can operate everywhere in Nigeria that the app can reach. Now, regulators might argue that, look, if you're operating everywhere in Nigeria with your app, you might as well get a national microfinance bank license. So I'm not sure where they are on that, but if they don't have a national microfinance bank license, that's something that they very likely would get. Would Kuda be eventually become listed? Or would the challenge with the fintechs like Kuda is, they're good with payments, right? Transactions. But where the juice is for banks isn't on the transaction side. So if you look at fee and commission income for the banks, I don't think there's any bank that is doing more than 100 and something billion per annum as net fee and commission income. So it's changed for the banks. Where the money is in, can I take that money and can I do invest in T-bills or do loans and get decent income and all that? But the microfinance banks, especially the fintechs, don't have that yet because for a lot of people, they use them for transactions. So I need to sort out my day-to-day payments, wire money there. I need to go out, wire money there and all that. So that model has to change. I do believe, though, that if you have a savvy team, they can squeeze out something and all that. So VFD, you can see, I don't have VFD numbers of heart. I know I wrote on VFD. Maybe I'll share the article at the end of the thread. But you can find VFD microfinance bank numbers in VFD numbers because VFD is listed. I don't know what's the play, but I suspect that the VFD team is cooking something because VFD used to have a stake in Abbey Mortgage Bank and they sold it. So the question is, what do they want to do with the microfinance bank? Do they want to make it bigger, which obviously would be the case? So I don't quite know what's the direction VFD microfinance bank take. But when you look at the fact that the VFD parents execute Abbey, it means that obviously they have plans to scale up VFD, the microfinance bank. But what do they want to do exactly?
Okay. And again, this is another popular question. Banks charge too much fees and all that kind of stuff. So just to lay it to rest, are banks making money from these fees that people complain about? Or is it really from loans or is it from banking, or are banks just making money from Nigerians?
Banks really don't make. Let's look at the banks.
If you can give numbers, because this is just big. Everybody's just really dunking on the banks.
Okay, you know what?
I put 5,000. Yeah.
Let's use Access, right? Let's use Access and let's see their net fee and commission income. Give me a minute. I know it's probably maybe 30 something. But the biggest bank in Nigeria by assets. Mm-hmm. So if you look at assets, that kind of use that to estimate what's the fee and commission structure for the other banks, right? Mm-hmm. So what do I have here? Net interest income, 198 billion. Net fee and commission income is 146. where you might argue that, well, Access is a huge bank. But when you look, if you're going to look at it from a top line basis, it's really not much, right? So, I mean, the charges that people complain about, which is e-banking charges that people are really, really upset, and account management. Some of the banks actually made a loss on e-banking income. I can't remember which, if it was Zenith, one of the big five, and one of the tier 2 banks. They made losses on e-banking income. So really, banks aren't making, the bulk of the money is from interest income. It's not from your account maintenance charges and the likes. That's not where the money is. So yes, I know people complain. You can argue that, look, should I be paying such charges? But the question is, they have costs to run. I mean, if you take the popular, your SMS charges and all those things, there's a sharing formula, I believe, with the banks and the telcos. So the question is, why is nobody complaining about the telcos charging banks for that? Right? I mean, so you can put the blame on that, or if you're not happy with that, but the telcos will tell you that, look, we have a cost base. So really, I know people complain about it, but I think it's just a small portion. Access is the exception because they're a huge bank. But if you look at all the other banks, even a bank as big as Zenith, the bulk of the money is from trading income, interest income, not fees and commission. I think Zenith had a year-on-year decline, slight decline in net fee and commission income because there was a drop in foreign currency charges and all those things. So really, that's not where the bulk of the money is. I know people don't like it. Nobody likes to pay and all that, but it is what it is.
All right. Just again, just reading DMs. Unity and Providence Bank, that's one I just seen now. Any issues there? Unity, I think they want to merge. They were doing that pre-CBN. Any update on that?
No updates on that, but I believe Unity is yet to release its audited full year numbers. And generally, as analysts, we're not clear what's the direction Providence wants to go. Will the enlarged entity remain listed? Will they delist? Nobody knows. Yeah.
Gotcha. All right. Then just last one again, just this. So someone's asking, if I compare dividend yield, if I have a higher dividend yield from a bank, does it mean that bank is a better investment? I just want to give a take on this. I have my own answer to this, but if I compare dividend yield and a bank A pays a higher dividend yield, does that mean my investment in that bank is better? He's trying to say, should I compare dividend yield and just ignore share price? What's your take on share price vis-a-vis dividend yield? Assume the bank are in the same tier, so let's remove the one about tier. Just two banks, one is paying more in dividends. Should I take that and go to bed and say this bank is better?
That's an interesting question. I know when people tell you it's an interesting question, it means that the answer is going to be complex. If you are a buy and hold investor, then I would say that your focus, it would be okay to put dividend yields above potential capital appreciation. Mm-hmm. And the average person is like that. Now, if you are more savvy, meaning you constantly check what's happening, you can read trends, capital appreciation may be more important. Also, because Nigeria is a high inflation environment, if by chance you do say 100% to 120% in 3-4 years on a banking stock in an environment where inflation is mid-20s and probably might remain there for at least another year or two. If that is the case, then it just makes sense to take those returns and exit. So it all depends on what's more important. And I say thirdly, to an extent, it also depends on the amount of money that you are investing. So if you are investing a fairly large amount of money, I think that capital appreciation should be more important to you. Because if I'm doing a 10 million, 50 million, 100 million, I mean, I can easily do 20-something% on a T-bill. So what am I waiting for a dividend yield for a bank that will pay me less? Now, if on the other hand, I'm aiming for capital appreciation, a 35% return on 100 million or 10 million is bigger than a 35% return on 50,000 naira, right? Because of the quantum of money involved. So that would be my answer. It really depends on amount, savviness, and just how you read it.
Okay, so this is a question that's again a lot. SEC just approved Bitcoin as an asset, also as security. Does this mean the Nigerian banks are going to now allow us to open Bitcoin or crypto-related transactions? And what does this mean to the banks? So, I mean, I've gotten about 3 or 4 of these questions, but as a whole, regards the crypto, the Bitcoin, the SEC, and Nigerian banks, what's going on there? Any insight? Will this change how Nigerian banks operate? Just what's your take on that?
I mean, I don't think it will, because the thing is, and funny enough, I remember asking the GTCO CEO, are you going to do anything around crypto, or going to have a crypto? Because when you look at it, I see no reason why we don't have a Bitcoin ETF in Nigeria. I mean, it's a simple plug and play product. Why don't we have that? So would the regulatory regime change in terms of, can I easily buy crypto with my bank account or my card? I think the roundabout manner is going to remain, because I don't think the CBN, because it's a catch-22 situation. The honest truth is, if we let individuals play in the sense that I can buy and sell, what's to stop me as a bank from saying, why don't I take $1 billion and let me put it into crypto? So I don't think the CBN wants that play. And in my view, personally, I feel that one of the reasons why the CBN kind of clamped down on people doing that, and banks were very strict with that. All people know that a few years ago, some of the banks were heavily fined for allowing people to deal in crypto in their bank account. So that's why banks have a very hard take on that. So I don't think that roundabout thing is going to change. But I suspect that in another maybe 3 to 5 years, we can easily have a Bitcoin ETF trading. If we're able to push that, then I think the banks would want to come into the action of that, for that, maybe from an asset man. And I see no reason why they can't do that. Because buy Bitcoin or buy Ethereum and hold it and work out the value and everything. So no, that's not going to change, because I don't think the CBN is as crypto friendly compared to the current sector.
Interesting. All right. So, Anome, we've been here, give or take, in about 15 minutes, will be 2 hours, just talking Nigerian banks, looking at the Fugas, looking at the other banks. I think for me, it's also been learning just to hear your perspective on how the banks are set up. We've segmented away from the big banks to the medium-sized banks. There are a few tiny banks, in quotes, which we can get to, but at least you've given us your perspective on the online banks. It's a bank called SunTrust. I want to get your take on if you know about it. Apart from that, I think it's been a learning experience for me, and I have picked up a lot from just listening to you. So let me just ask you about 2 banks. There's going to be SunTrust, if you know about them, and then the other one's going to be Keystone, just because of what's going on with them. If you have any insight there, that would be fantastic, and then we'll just sort of start to wind down. So I know if you follow SunTrust, this is like a fully online bank. They are the first online bank, I believe, in Nigeria. Not Kuda, like this is a bank, but it's more or less a commercial bank that is online. Do you follow them?
Yes and no. So my views on SunTrust, and this is just me as an outsider looking in. They started out with a lot of big banks and all that, but that's kind of fizzled. I don't know if it has fizzled from, maybe we're just not heavy into marketing, or if it's from the numbers. I haven't looked at the numbers, but this is just my view on them. They've become very quiet. Maybe it's just the stance of the current MD, because if I recall correctly, I think the first MD left, and then they had a new MD, so maybe they've taken a different approach. But they've been a bit quiet. And, in Nigeria, I mean, it might be a good thing or bad thing, because when you look at the likes of maybe Standard Chartered, we don't really hear about them in the news. But if some of the banks like Access or GT's down, everybody's grumbling, and you can hear that. So maybe it's their strategy. But again, to me, I don't know how much skill they have, because even when I remember seeing Providus Bank numbers a few weeks ago, actually. I don't think SunTrust might have more than maybe 1 trillion in assets. So if you are in a 1 trillion asset size, I mean, if they are big in assets, fine. But if your asset base is like just 1 trillion, really, how do you compete in an economy where the bigger banks, even tier 2 banks, are moving 10 trillion in assets? So I don't know what's their game plan. They've been quiet, and at times like this, I don't think that helps.
I mean, they came up from microfinance. No, is it microfinance bank? No, mortgage. Their father, in quotes, is like a mortgage bank in Abuja, doing pretty well. So perhaps this was an idea to say, stretch that relationship. You open the account online, I can get your provident fund or housing fund loan and all that kind of stuff. But like you said, they've been quiet. So let's see what's going to happen. What about Keystone? Just to sort of bring us home, what about Keystone? What's your take on Keystone?
Keystone, there's no color because they are not listed and all that. So, I mean,
yeah, that's why I chose them. What's your feel of it? I mean, they've gone through all that CBN thing. What's your feel in that bank? We don't have any numbers, but what's your take?
They need skill. They need skill. Banking in Nigeria is a business of skill. So the question is how much. If I recall correctly, I know they were supposed to acquire someone. Was it Keystone and Union? Or no, was that Polaris?
That was.
There was supposed to be
before this whole talk came about. Yes, those are the CBN banks that they pulled their license, right? And it was supposed to be like a measure of folks that would then be sold to a larger investor. I'm not sure where that is now.
They need skill. That's the thing. They need skill. If you don't have, you either have skill in terms of branch spread, which is why I suspect that Providus wants to acquire Unity Bank, because from a balance sheet perspective, a balance sheet is just it's not useful, right? But from a branch perspective, they are spread. So you either have scale in terms of branches, or you have depth in terms of your balance sheet. So if you don't have either of them, then 3, maybe your unique selling points, partly branding and partly strategy. What would be the strategy of a Keystone Bank? What's going to be the strategy of a Polaris Bank? I don't know. Sure, you can do corporate banking, but I remember looking at Access and revenue. So if the biggest bank in Nigeria, corporate banking is just there, then for the smaller banks of corporate banking, can you do? Head or tail, money has to come in from somewhere. So you're either making money from retail, or you're making money from corporate banking, or you're making money from trading, you're making money from interest income. So if you're not heavy in any of those things, how are you going to survive this industry? I don't know. I hope it's not a case whereby some banks have maybe one major depositor, like in the olden days. And so once that depositor says, I don't want my money here anymore.
Yeah.
That's the bank pesos out. So they need skill. If you don't have skill in this industry, I don't think you're going to survive for long.
Okay, let me ask you this question. Jamie was in town. He says JP Morgan is going to set up a branch in Nigeria. I think they are targeting the corporates, the American corporates, the multinationals that have expressed this lack of forex to drive their business in Nigeria. Is that going to be a wave, or is it just Jamie seeing a little sliver? He's the one that does their settlements in America. Is he just coming to save a few folks in Nigeria, or do you think the American banks are going to come back because Nigeria is now, quote unquote, a larger economy? What's your take on that? If you're a Nigerian CEO, you're worried.
Okay, so let me start with JP Morgan, which I think is an excellent bank, right? I mean, it's the biggest bank in America, right? So clearly you're doing something right. I like Jamie Dimon. It's pretty blunt, which makes my job easy as an analyst. To their strategy with Nigeria, I mean, it's just an office, right? But obviously, when you look at it, typically JP Morgan has always had close banking relationships with the federal government. So opening an office, I mean, how much of trade really is happening between the US and Nigeria? It's not that high. But if you're looking at it from you hold our crude oil revenue, so come open an office with us here, then it makes sense. But if you're looking at FX flows, and I think the MBS has a report on this, right, where they look at the breakdown of FX into the country and all that, JP Morgan is the high. What do you have? You have mostly your Stanchart, your Stanbic IBTC, if I recall correctly. So really, Nigeria is really a small play for them and all that. So if you're spending a couple of millions just to maintain your relationship in Nigeria, then it's not a big deal.
I mean, just to settle transactions. I mean, Exxon would settle through them. NNPC is there. You see what they are doing, but I'm just thinking, do you think this is going to be something bigger? Will they now go to the second tier Nigerian bank and say, okay, we're going to allow you to open up LCs for us if you want to buy a Boeing plane or you want to pay Facebook? That's what I'm going to really. That is there something else here, or it's just going to be they're here because of last year? Companies going to settle in dollars.
No, I don't see the next year. I don't see the next year happening. But if look at the global macro, right?
Yeah.
What I would like the whole reordering of the US versus the rest of the world versus China. If this new trading, if the new world as it is remains where it is, then it might make sense. If I'm an American company, I'd rather deal with a JP Morgan than deal with some other bank. Because when you look at it, what's the parent company for Standard Bank, right? It's ICI, I think, of China. Some Chinese guys have a stake there. So if it's from that angle, and Jamie is someone who's not frivolous when it comes to taking decisions, you can tell from his thoughts and words and everything. If it's from that angle, it makes sense for an American company to deal with a US bank and all that. So, but other than that, I just don't think the economy in Nigeria is big enough for what's the headache. So a lot of times people complain, why are my cards getting short or my dollar cards and all those issues? Because just Nigeria is just a headache to sort out those things. So I don't see the market here because what's the size of the economy? We are a what? Is it a 400 billion economy or dollar economy or so? Skip my mind. We're not big enough. We're not that significant. South Africa is probably more relevant from that angle than Nigeria, in my view. So, I don't see much of upside from that side.
I hear you. All right. What about Chinese or Indian banks?
So you have some Indian presence, right? Sterling Bank has you have Indians, some Indian shareholders in Sterling Bank. So I guess they'll maintain that. I find India interesting. Some people might say, well, you have India, you have China is way ahead. But I think India is you have to look at the conversation. Do democracy and prosperity go hand in hand? If that is the case, do you want a democracy and prosperity like most of the world, which was one of the reasons why the US is such an interesting and amazing place? Or do you want some form of autocracy and prosperity, and then you have China, maybe Saudi and all that? So you have India in present. But I think for the Chinese, and I think the Chinese would interestingly become players in the banking space. I think OPay should be the bank people watch out for. What do they want to do? Money is not a problem. for the Chinese. When you look at the way OPE has taken that market, they came in a very interesting manner. So we're going to do a bunch of things. We're going to use that to acquire customers, understand customers, and shut all those down and focus on banking. So if banks, the Chinese, are going to play in the banking space, it's very likely that they would use OPE, and it's very likely that they use Stanbic IBTC, because remember, the parent company for Stanbic has some Chinese holding in them. So I think those would be the two plays for them in terms of playing in the Nigerian banking space.
Fantastic. All right, now just running up to the top of the hour, 2 hours. Yeah. Give or take about 2 hours or so spent talking just about Nigerian banks, investing in general. I got a lot of DMs, but really asking those same questions. What should I buy? What should I buy? I want to really teach you how to look at the market at the macro level and to look at opportunities, not individual stocks per se, not to say give you a tip or a signal, but to understand how these banks make money. So that way you can actually then go back and do your research and say, I like this sector. I like what this bank is doing in this sector. I'm going to take a position here. If you don't know what to buy the index. Buy the banking index. I think it works for you. You should be able to get exposure to Nigerian banks. This is a sector that the banks are doing pretty well. Like April said, the banks are always making money. So if you sort of complaining, invest and then get a bit of that those funds back to you as an investor. Onome, any closing words? I mean, what should investors look out for? This is just first quarter. We're in second quarter now. There's third and fourth. Just overall, what's your take on this particular sector? What should we look out for? What are the flags or the opportunities for us?
Okay, so let me start with the tier one banks. I think that those that are done with their capital raise, Access and Zenith, kind of have a head start in some ways, because I'm not raising money anymore. There's not getting further dilution. I can focus on my core job. For GT, GT is probably one of the most hated banks by customers, which to me means you're actually doing a good job in Nigeria. I think GT would have an amazing year. Strategy is clear. So the race, tier one race is between GT and Zenith, and then you have UBA and Access. Like all the tier 1.2. For tier 2, obviously, Fidelity is the bank to watch. Stanbic is slow, steady, doing excellently well. They are not a noisy bank, but they're doing great. So all in all, I think as long as, and I expect that inflation should probably hang around where it is, as long as you have inflation where it is, you have the CBN with orthodox policies, it means that net interest margin spread you are seeing of 11, 12, 13%, I think that will hang for the rest of the year. So as long as that is the case, interest income will be fine for banks. I suspect that probably we'll end the year around maybe 1,650, 1,7. So you may see, if in your likely event we dip, say 1,750, 1,8, 1,850, then you may see FX gains return. And just to mention that for Fidelity Access Bank, if we strip away the FX gains, the quarterly numbers will dip significantly. So I think anybody watching Access Bank from a short-term play perspective, maybe next year, maybe later in the year, once those trading gains thin out, then you're going to see, I would say, the real performance. But they're in a great place. So all in all, I think it will be a good year for banks. And who knows? I guess we may have one or two major announcements maybe before the end of the year. Let's see. The year is like 6-7 months to go. So there's a lot that can happen. But I think it's clear in the industry that the banks that are tiny need to merge. You can't be tiny forever. So what's going to happen with those banks? Unfortunately, the Access guys have gotten so much of a ribbing because people are constantly complaining. But the honest truth is, when I look at some of smaller banks, if I'm an Access or if I'm a Fidelity, I might say, look, why don't I buy one of these banks and scale up? Because, I mean, it's interesting. They are all very nicely well-run banks, but they are small. So I think it's going to be a great year for the banks. And who knows, they probably would. It's year on year. A lot of the income you see is organic net interest income. So 2025 should be a good year for the big banks and tier 2.1 banks.
Interesting. Yeah, good. That's a good framework going forward for us. I appreciate it. Okay. I mean, it's been fantastic having you here. I can't tell you how much really fantastic insights that you bring in and the numbers that you're showing. That just shows that you're tracking these guys closely, and I just hope that you will come back. If you're bringing him back here again in another quarter to just review where we are with these banks, I appreciate you doing that for us. The DM show that you are well received. Thank you so much for that. Let me just say, guys, again, the whole idea here is to make you better with the numbers, better with reading the economy. It's your money. We want to just basically make you, should we say, more appreciative of those numbers out there. So when you invest, you're doing so with knowledge, with information to make a better decision. So that's what we do here every weekend, 7 p.m. We're talking money, the economy, and finance. I always end with asking you, hey, take the time and invest in the knowledge, read stuff. There's Audible, there are podcasts, there's YouTube. Make sure you are reading about what this all means. What is money? What is interest rate? What is inflation? Understand the terms, how it applies to you. You can only get better. You never lose that knowledge. It's only going to make you, be a better investor and, of course, a better taxpayer. Again, we do have books out there that you can read to make you better. Tons of them. Warren Buffett just retired. I saw a graphic today. He had made 5 million % return. 5 million %. That's the return that he made for his investors. 5 million %. And I do think it's only because he learned stuff and he applied it. Oxley, you have a question? Really quick so we can go. Oxley? Yeah, go for it. Yeah, go for it.
I just wanted to, ask, I listened when he was talking about transaction fees, right? So I'm like, I don't know whether it is only in Nigerian clients that you see banks, charging card maintenance fee, card fees for giving debit cards, SMS fee, and all the electronic fees. I'm thinking that compared to other jurisdictions, some of these costs, I don't know why. I'm thinking, is it that the Nigerian banks are that lazy that they are all interested in transparency? Because if I give you a deposit, if I give you a deposit of 1 million naira, overnight, if you take that money and go and lend it in overnight interbank, you are making almost 30%. Plus, you are lending that money also at interest. So why? I'm thinking why? Because people have an account elsewhere. I have accounts in West Fargo. I've never come to my account and see SMS alerts, even debit cards that I'm giving. It's at no cost. So
I hear you. So, I mean, Oxley, look at it this way, man. You are operating in an economy that uses generators. Wells Fargo doesn't use generators. So someone has to pay for the generators. It's just being blunt, right? We have a high cost base in Nigeria. So the banks are passing the cost to you. The banks didn't create the cost, but they're passing it over to you. Same thing with GSM.
But remember, I gave you a deposit, which you are at interbank overnight interbank lending rate. You are lending to other banks part of my deposit at 31%. So is it that marginally you are not interested in using the excessive money that you make in interest income to be able to offset this minimal operating cost? You just want to transfer everything.
Or what if the argument would be that they would also argue with you that they are doing that and that's why you are just paying what you are paying. If they gave you the full cost, it would be more than that. They would argue that with you because it's expense. Base stations go up. Transporting cash. Wells Fargo doesn't transport cash from one street to the other street now. They don't do all that stuff. They know they don't pay for private security. They don't pay for all that stuff that we pay here. So, I mean, you hear us talking about banks that are doing 100% margin and are returning 40% net. What's that 60%? It's all quote unquote systematic to Nigeria. A bank is paying for water borehole, it's paying for power, it's paying for security, it's evacuating its own cash, it's paying to train when it hires people. So those other banks don't have those costs. So costs in Nigeria are high. I hear you that should it be that high? But until we can do a diagnostics and say, okay, what is the real return vis-a-vis, and it's in their balance sheet. You can look at their balance sheet and say, okay, these are their expenses, their incomes. These are their expenses. These are their incomes. Then do analysis.
I'm looking at this bank issue Visa card. Visa card is Mastercard is issued everywhere in the world, and all the cards have their card being with Visa and Mastercard. So it's the same card. So why is it in Nigeria someone has to pay?
You're paying licensing. Right?
Totally debit card maintenance card.
No, I hear you. I'm not.
People have debit card in the US. People have the same debit card of Visa and Mastercard in the UK. They're not paying anything.
I hear you, but again, they have to cover their costs. We can argue this, and both of us will say the same thing, and also the other side. Costs in Nigeria are high, so they have to cover their costs. Are they price gouging? Perhaps, but it is what it is. Again, what brings down cost is competition. So all those banks, Kuda, SunTrust, all those banks that don't require, should have been the competition. Maybe when the Chinese banks comes, we can then compare and say, okay, this is a Chinese bank and they're not issuing debit cards, and we compare it with Nigerian banks. Perhaps costs come down, but yeah, I can't speak to. I mean, you run a business in Nigeria, Oh yeah, Oxley, but we can't stop. I think Oxley, you've made it.
What's it called? Sterling has waived charge completely, or the transfer charges. They are waived it. Means they can actually live without it. It doesn't affect their numbers. The profit on electronic banking, if you look at the numbers for some banks, is marginal. It's not something that if they stop collecting, they will stop being profitable. And I think your guest has already established that bulk of where the bank makes money is interest income. This is e-banking. Sometimes it's 5% of their net profitability. So it's marginal, and they can live without it. It's just that they don't want to, basically.
Well said. I mean, like I said, there's no argument there. It's just a matter of saying how much is it price gouging and how much is it cost recovery. But I hear you. Oname, again, I appreciate you. Thank you so much, sir. If you're not following Oname, please do. Lots of insight shared on his page. Do follow, give him a follow. And I'll see you guys next week. Oname, thank you so much. I appreciate you, sir.
Thank you. Thank you for having me. I just give the last word. Much as people love Kuda for the cheap fees, Kuda is loss making. So Kuda is loss making. Sterling Bank has an extremely high cost to income ratio. So the question at the end of the day is, we're in the business of making money. So I know that people are hot by the high fees and charges. But look, the easiest way, if that's the system you have, then, go make money. Take up a stake in a bank and ask them to drop the charges down. 2, the game is about size. Even if the CBN wakes up one morning to say, look, you know what, okay, let's remove all fees and charges. The smaller banks can cope. That's just the honest truth. So a first bank or a GT can say, okay, you know what, I'm going to go fee less. There is a cost there. That's what people don't get. Somebody has to bear that cost. Because if I'm a bank, the next thing I might say is, if I'm not making money from retail, right, then why do I want to run retail? So I might say, you know what, I'm not interested in returning retail banking anymore because CIB is where most of my money is. So let's scrap retail. But imagine if you had 2-3 big banks saying, we're not doing retail anymore. That's going to be a problem. So it's a chicken and egg situation. I think that this cost will come down with time. But somebody just has to pay. Because if I'm a shareholder of a bank, I'm sorry, I don't care. You just have to. My bank or my investment should not be the one to bear the costs of the issues in Nigeria. That's my view. At the end of the day, it's business, right? Banks are in the business of making money and keeping your money safe. Those have costs involved and people have to pay. So yeah, you can go use the fintech and all that, but at the end of the day, the fintechs are loss making. And in all humility, if you need 100 or 200 billion naira loan in this country, your fintechs can't do that. They can't. They just cannot mobilize that kind of money for transactions. So what do we do? Ultimately, the only solution I see is we just need to make the cost of communication come down. We need to have more people using mobile banking apps. We need to have open banking, and I think open banking will really take effect sometime this year. And let's see if those things will help bring down the cost. But the costs are there, and banks cannot absorb the cost. I was looking at the numbers for the banks. For every 100 naira a bank makes as profit, about 32 to 34% is taken up by taxes. You have your CIT should be around 30-something percent. You have ETF, you have a bunch of other taxes and levies. I'm not even talking about CSR. So really, the banks are, if you're taking almost 30-something percent of my money, why, where is the room to give you more, right? I'm already paying. In fact, left to me, why are the banks doing so heavy CSR? I look at some of the CSR figures for banks, and sometimes there's a flood in Nigeria and the banks are doing $1 billion naira. Why is that? That's not the job of a bank. Sure, you can do CSR, but why are you doing $1 billion naira? Because there are floods in the country. That's not your job. There's a government, there's a state government, there's a federal government, but Nigeria is an interesting place. So really, the banks are also in a tight spot as well. If really it was workable, trust me, the big banks would say, hey, let's make it free. But it's just not doable in Nigeria at the moment. It's not doable. The cost. Your cost is you are running like a startup, or your cost is, it's cost. So really, I know people are pissed about it, and I get it. I'm also pissed myself when I look at the charges, but somebody has to pay for it. It's in the system. So, that's... But thank you for having me. I quite enjoyed myself. I wasn't expecting so much interest.
Yeah, if you guys just hopped in, maybe I want to answer a few questions. I've got Accurate. Accurate, go ahead.
All right, thank you.
Real quick, yeah.
Yeah. This is my question. Why somebody bank in Nigeria and they have millions of naira in account, maybe like 2 to 3 years, it doesn't took the money, use it for anything, and the bank continue to deduct the money. Instead, they use the money, to do business and to even return profit to the owner of the money, and they are keep on give us debit on debit. I don't know what is happening. I want somebody to explain to me proper in that way.
Oh no, man, that's a very serious question. That's why I wanted him to ask his question. And I've tried that experiment before. I think I posted it on Twitter. I put 1,000 naira in a bank that will not be named. The money went to 100 naira. They were debiting me till it went to 100 naira, 1,000 naira. So I didn't know laws against that. If I don't use SMS text, I don't do email, I don't use the card. Why are you debiting me? I know it's not you, but just what's your take on that?
So maybe I'm a bit capitalist. So, but here, let me take it from a different angle, right? You see, the game is rigged against savers in Nigeria. Why? We remember that for years we had savings accounts, regular savings accounts doing 1.2-3% per annum, and people still parked money in savings accounts. Even if I won't be surprised, even if a savings account starts to do maybe 2% or 1%, a huge chunk of Nigerians will still leave money in savings accounts. So if the game is rigged against you as a saver, there's not much you can do. Now, coming to your question, yes, You can complain, you can write fees, but the question is, even if you lock up the money, there are costs involved in keeping that money, right? I mean, you have your CR ratio and all that. There are costs involved. I mean, for some of the banks that we looked at today, I think the tier 2 banks, some of them have restricted deposits with the CBN as high as $1 trillion. So there are costs involved. But I'll take it from a different angle. From a personal finance angle, if you have $1 million and you're not going to use it in a year or two, I don't think that money should be sitting in Nigeria bank account. Now, we can argue about why should they charge you, should they not charge you, because there's no, you don't have money moving in and out. But I like to work with the system as it is. I have $1 million today, I don't need the year. That money is not going to the bank account.
Where should it be on, man?
You should put it in a money market fund.
So like, what does that mean?
Yeah, put it in a money market fund, because you can easily do 10, 12, 15% or more.
So do you have like two money market funds you want to tell folks that are listening?
I mean, if you're going to do money markets, you go with those that have size, or you have you have Stanbic, you have
there's Fidelity. Sorry, there's not Fidelity.
First, I don't know what iteration they call it, the asset management arm of First Bank. I mean, so yeah, it's not the ideal answer people want, but look, I like to operate. The one thing about Nigeria is this: you have to take the country as it is. The country is not operating in an ideal manner. So in your investment strategy, you also have to invest in like manner. Because in an ideal world, banks should not be really, you don't want to be seen on the bank income, made huge amount of money as FX gains and this and that. That's not where the money should be. But if you have the exchange rate sliding up and down, I'm a bank and needs to make money.
Okay.
So if the charges are crazy, you see the charges are crazy, you move the money to an asset management firm. So whatever the asset management firm charges you, net in a year, you should probably have you have way more than you have in the bank account, so you have your flexibility, in my view.
Yeah, lots of money market funds in Nigeria. Almost all the banks have one. Many insurance companies have it. Well, not mutual funds. I see someone say mutual funds. Not mutual funds. Money market, which means short-term funds that invest in, say, treasury bills, commercial papers, fixed deposit. That's what money markets are. You can put money in, you can take money out. It pays you a higher rate of return. It's not like a savings account per se. So he's saying money market, not mutual funds. And I guess it's completely correct. You've got to say, if you're going to leave money, stocks accurate, if you're going to leave money for a while in a bank and it's a large amount of money, you don't leave it in a bank, you put in a money market fund. So you sort of avoid those fees, right? I know it's not perfect answer, but at least we're giving you a solution to that. Yeah? You're good?
Yeah, I'm not in a state, and I try much as possible to, with access, and I send multiple email, but they are no response.
I hear you. Just do what he has said. If you're going to keep that sort of money there, maybe just buy a fund, buy into the fund. They would have a money market fund. Ask them how to buy a money market fund. Leave it there. Because you are in the fund, they won't charge you those banking fees per se. It's not 100% the answer, but it helps a bit in your concern. Yeah. Appreciate that question, sir. Let me let Onome go home. I've kept you here for too long. All right, folks. Thank you so much, guys. Onome, I hope when I call you again, you'll come. I really have enjoyed the session, and I wish you. Yeah. All right.
I enjoyed myself.
All right, excellent. We're here every Sunday, guys, 7 p.m. West African time. I'll see you folks here again next week. Do have a good day, and bye.